All right, today we're going to look at PayPal. We're going to be looking at PayPal. We're going to see what it's worth, how much you should buy it for. We're going to look at the risks, the opportunities, and essentially just see what you would want to pay for PayPal if you're looking to invest. And before we look at the valuations, we're actually going to take a look at the numbers and get a good idea of what the business is going through, how they make their money, and how that factors into the valuation. All right, so looking at PayPal, they currently have they process about 1.8 total trillion in total payment volume, with an annual revenue of 33 billion and 427 million account. Looking at the stock price, they had a peak of what is that, 290 bucks, but it's been trading very, very low over the last 3, 4, 5 years. Yeah, I think it's down about 85%, 86% from its peak. Look at the max. Yeah, it ran up really, really high around COVID. And then since then, it's been trading at an all-time low. And so generally when we see stuff like that, it can sometimes be a good time to buy because you want to, buy low, sell high. But as we look at the company, as we look at the valuation, we'll get a better idea of what we can expect when it comes to PayPal. So PayPal has a new CEO, Alex Chris, and he is trying to transform the company into an AI-driven global commerce platform. They're at a really critical point in their history. And so we'll look and see whether or not it's worth it to buy PayPal, or maybe we should just skip it and look on to something else. All right, looking at their business model, they have 430 million customers across PayPal, the legacy segment that everyone's familiar with: PayPal, Venmo, and Zoom. Looking at the revenue, 90% comes from transactions. And then you have another 10% for other value-added services like interest income, the credit, and any various subscriptions. To break down the revenue a little bit more, they charge merchant fees, instant transfer fees through Venmo. Then they also have some cryptocurrency trading spreads and pay later merchant fees. And then for the value-added services, they earn interest on the funds they hold in reserve. They have credit products, gateway, and subscriptions for merchants. And then they also have the point of sale services. So if you work at a restaurant, you can use the Zettle POS, take credit, and take transactions through there. Looking at the competitive landscape, it's really, really saturated. You have Apple Pay, Google Pay, you have Stripe, Aiden, Block, Square, Shopify, Cash App, a lot of different services out there that are pretty much eroding PayPal's business. They don't really have anything unique. The biggest unique thing that they have going for them is their sheer size. But for the most part, the payments processing industry, payments in general, are starting to be a little bit commoditized. Currently, the market forecast for the payments industry, the global payments market, is around 150 to 200 billion, set to grow at around 16% conservatively on the low end, and then 22.5% on the high end. The largest addressable market is in Asia Pacific. You have India, Southeast Asia. The biggest segment for growth is real-time payments, and that's set to grow at around 36% annually over like the next, 10-ish years. But a big point of growth is B2B payments. There is about $125 trillion annually still made by just checks and wires. And so if they can move into that segment, expand and grow, then PayPal might have pretty good upside. One big opportunity for PayPal is the use of Fastlane. It allows for one-click guest checkout. They are seeing promising results with 80% conversion rate improvement with early pilots. And they're also trying to monetize Venmo. I use Venmo a lot, probably more than I should, just paying friends, going out. We do have a lot of risk though, just because the landscape is so saturated. And so looking at the investment thesis, it's currently valued as a legacy technology company, but it possesses a few core moats that other companies can't really replicate. So first off, they've been around for over 20 years. They have huge scale, $1.8 trillion processed total payment volume per year. And then they have about 430 million users. I personally use PayPal for my PlayStation Network subscription. I use Venmo. Um, all of my friends use it. So it's definitely going to stay around. But like we mentioned, it's really competitive and it's kind of becoming a commodity product. All right, so next we're actually going to look at the Truth in Numbers platform, get a good idea of what you should pay for it. We'll model some scenarios and then we'll see what we can expect in terms of entry prices and the amount of money that we would expect to make over the next 5 or 10 years. And so we have the Truth in Numbers platform. This is by far the best place to go if you're curious about a stock, if you are interested in buying a company, but you're not really too sure what you should pay for it or how much you would expect to make. All right, so let's get into the valuation with PayPal. They have a market cap of almost 50 billion, which is kind of surprising considering that their annual revenue is 33 billion. So it's really, really cheap, extremely cheap. Free cash flow, our price for free cash flow is only 10, which is wild. So just looking at the metrics, very, very cheap. P ratio also around 10. And so really, really low valuation. And generally when you see a low valuation like that, there's either something wrong with the company or it's just being completely mispriced. So let's just jump into the valuation. Let's just run it through with easy mode. We'll set the desired return of 9.62, and that's just based on the weighted average cost of capital. The expected growth rate is 1.55. I feel like that's too low. It might be the expected FCF growth for the year, but I don't believe that it'll just decline year over year at that rate. So let's just add a conservative growth rate at around 5%. Put the variance of 20 so we can get the best case scenario and also get an idea of the worst case scenario. And so we'll leave 5 as the base case. So we'll use free cash flow for that. And so yeah, fair value showing up at around $75. So it's currently trading about 25% under the estimation of fair value. So we see the fair value of 75, compounded total returns around 12.3%, which is really, really good considering that the weighted average cost of capital, the hurdle rate is only 9-10%. And so looking at the valuation scenarios here, we have EPS growth of 9, EPS growth, free cash flow growth of 11, 9, and 7. Although we put 5 as the expected growth, we also have to factor in the buybacks that they have. So currently they're buying about 4% of their stock every year for the last 5 years, which is really good. And so if we add that with the expected free cash flow growth of 5%, we get some pretty good numbers. Okay, and so let's just break down this scenario just a little bit. So if you think that PayPal can conservatively grow at around 5%, they're going to continue doing about 4% of buybacks annually, then this is a very valid fair value. And so you would expect to return about 12% annually if this valuation scenario does match reality. And so we'll play with some more scenarios just to kind of get a feel. We'll play with some of the inputs, and then we'll try to understand even better cases and worse cases. So let's take it off of easy mode, and let's just drop this risk premium down a bit. Let's set our desired return at 15. That's generally my personal hurdle rate, but we'll put the risk-free rate at around 4.2. The beta looks right. Actually, let's just put that at 1.3, make it a little bit easier. And so best case scenario with fast lane growth, they monetize Venmo, let's just say that they can probably hit about 8% in free cash flow growth. Dividend growth stays the same. Share growth stays the same, so they're still doing buybacks. And then we have a terminal growth rate of 2%. I think that that's pretty good considering how mature PayPal is. And so let's go over to the base case scenario. We'll leave that at 5, but then let's put the worst case scenario at around 2%. 2%, and let's just say that they don't really do too many buybacks. Let's just say that they, I don't know, drop their buybacks down to around 3%. Is that? And so even still, the fair value is still around 88 bucks. So in the previous valuation scenario, I think it had a higher risk-free rate and a higher risk premium. Since we lowered those, we get a little bit higher number. I still do think that the fair value would match reality in that it could offer you some outsized returns considering. I know that Stripe is in talks to buy PayPal. They're currently offering about $61 per share. I do think that is a little low, but considering the price that it is now at 56, they would be getting a discount to fair value. So if anyone is looking at buying PayPal, I definitely recommend you check us out at TruthinNumbers.app. You can put in your different scenarios. If you want to run some more scenarios, I would definitely recommend signing up, checking it out, and seeing what you come up with. So as always, if you're looking at companies, if you don't know what price to buy, if you want to get a better idea of your entry targets, I would definitely recommend checking out TruthinNumbers.app. Smarter investing with zero guesswork. It's time for us to stop guessing and start valuing. Protect your wealth. Sign up today. I'll see you in the next one.